You have probably heard people say they made money in the stock market. But have you ever wondered where the money actually come from? Who is the other side of your trade? And when you click buy on your phone, how that money goes from your account to company stocks? Today, I am going to break down how the exactly stock market works, the real mechanism behind every trade you make. Hey everyone, welcome back to the channel. If you are new here, I am Himmat and this channel is all about making investing and trading simple for beginners. This is the first video in our market structure series where we are going to build your foundation step by step. And trust me, if you know how the market works from the inside, you will make much smarter decision as a trader. So let's start from the very beginning. What actually is the stock market? Think of like a marketplace. But instead of buying vegetables or clothes, you are buying and selling ownership in companies. When you buy a stock, you are buying a small piece of that company. That piece is called a share. If the company does well, your shares become more valuable. And if it struggles, your share loses value. Now, here is the key question. If I want to buy shares of Reliance, who am I buying them from? Am I buying directly from Reliance? No, I am buying from another investor who already owns those shares and want to sell them. This is the stock market's main job. It connects buyer and sellers. Now, this next part is super important because most beginners don't know this. There are actually two markets within the stock market. Let me explain this. Primary versus secondary market. Primary market. This is where companies first sell their shares to the public. It's called an IPO, initial public offering. Let me give you an example. When Zomato launched its IPO in 2021, they offered share at 76 per share. If you bought shares during the IPO, your money went directly to the Zomato. They used that money to grow their business. But once the IPO is done, those shares start trading in the secondary market. In the secondary market, you and I trade shares with each other. If I buy Zomato shares today at 100, that money doesn't go to Zomato, it goes to the person who sold me those shares. So, the stock market you see every day on your trading app, that's the secondary market. The company already got its money during the IPO. Alright, now you know where the trade happens. But what actually goes on when you click on buy? Let me walk you through the exact process. How does a trade happen? Let's say you want to buy 10 shares of TCS at 3500 per share. On the other side, there is another trader who wants to sell 10 shares of TCS at 3500. You both place your orders on your apps, but here's the thing, you are not directly connected to that seller. Between you and them, there is a whole system working in milliseconds. Step 1, your order goes to your broker like Zerodha or Group. Step 2, your broker send it to the stock exchange, NSE or BSE. The exchange has a matching engine. It's like super fast computer that matches buy and sell orders. If your buy price matches someone's sell price, the trade happens. Step 4, the trade is executed. Step 5, money moves from your account, share get credited to your Demat account within one day. All of this happen in less than a second. Now, here's the question everyone asks, and it is probably most important thing to understand about the stock market. Who actually decide the price? Is there someone sitting somewhere saying today TCS is at 3500? The answer might surprise you. Who decides the price? The price is decided by supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell than buy, the price goes down. There is no person or authority setting prices. It's purely based on what buyers and sellers agree on. Let me give a simple example. Imagine Infosys announces record profits. Suddenly, everyone thinks this is a great company, I should buy. Demand increases, sellers realize buyers are desperate, so they increase their asking price. The stock price rises. On the flip side, if bad news comes, maybe the company miss earnings, everyone want to sell. Buyers aren't interested, sellers have to lower their price to find buyers. Stock price drops. Limit order versus limit order. Before we wrap up, let me quickly explain two types of orders you will use when trading. Market order. You are saying, I want to buy this stock right now at whatever the current price is. Limit order. I only want to buy if the price reaches my target. Let's say TCS is trading at 3500. If you place a market order, you will get it at 3500 or very close to it, whatever sellers are offering. But if you place a limit order at 3450, your order will only execute if price drops to 3450. If it never reaches that price, your order won't go through. Most beginners use market orders because they are simple, but as you get better, limit orders give you more control over your entry price. Alright, let's quickly recap what we have covered today. 1. The stock market is a marketplace where you buy and sell shares of a company. 2. There are two markets: primary, where the company sells their share in an IPO, and secondary, where you and I trade with each other. 3. When you trade, your order goes through from your broker to the exchange, and when it matches to the other trader, it gets executed in milliseconds. 4. Stock prices are not decided by any person or authorities. They are decided by supply and demand. And 5. You can use market orders for instant execution and limit order if you want to wait for your target price. Understanding how the market works is the foundation for everything else. And this is just a beginning. In the next video, we'll talk about what moves stock prices, earnings, news, sentiments, and how can you use this knowledge for your advantages. If this video helped you, hit the like button and subscribe to the channel. If you want more friendly beginner content like this, we are building something special here. And drop your question in the comments below. Let me know what one question you will still have regarding stock market. I read every single one and your questions help me to make better videos. Thank you for watching and I will see you in the next video.